Markets bounced off correction territory from last week, but what now? Well, it's been 5 days since we've had any tariff drama, and we've seen a bit of a rebound. However, markets are still well off all-time highs from a month ago as economic concerns remain. So, is the economy really tilting towards a recession? Well, a lot of it will be depending on you, the consumer. Consumer spending has been incredibly resilient through both a pandemic followed by a significant surge in inflation. In fact, over the past 10 years, only the first half of 2020, aka COVID, did consumer spending decline quarterly. It also preceded the only 3 quarters in the past 10 years where annualized GDP declined. However, with all the tariff drama in the past month, consumer confidence appears to be showing some cracks. Post-pandemic, consumer sentiment has been weaker and largely trending between 65 to 75 points outside of the post-COVID reopening and peak inflation in 2022. We exited 2024 at 74 points, and January was just a bit lower at 71. But then came the tariffs. February took a dive, falling 9%. This was followed by last Friday's preliminary March estimate, sliding down another 11%. It's the lowest reading since 2022 when inflation was rampant. While inflation progress is stalling, it's still below 3% annually now. So what's driving this pessimism? Well, tariffs. Despite current inflation meandering around 3%, expectations for future inflation is surging. Exiting 2024, inflation expectations for the next 12 months were largely tracking in line with current inflation progress in the high 2% range. However, those expectations have spiked since. We exited 2024 around 2.8%, with January ticking higher to 3.3%. However, February shocked markets, surging to 4.3%. And then the preliminary March expectations jumped further to 4.9%. Markets had largely shrugged off tariffs as a negotiations tactic, but the consumer obviously are taking them a lot more seriously. And to be fair, one-time tariffs aren't going to increase inflation long-term. We would just see a step up in prices, and then the more normal inflation progress should resume. However, another step up in prices could break consumer confidence and by extension, their spending. As we noted earlier, a resilient consumer is a key part of avoiding a recession. While we're not guaranteed a recession yet, odds are increasing. So we are monitoring consumer confidence and spending as a key focus for us now this year. Again, we believe more macro stability will be needed to right-size the ship and regain consumer confidence.